just stay on. We have a quick corporate conversation that we have to complete. So Prakash would urge you to listen into it. Alembic Pharma posted a better than estimated set of Q2 earnings. The company has seen their revenues rise 14% this quarter, led by the US business and the API business. And margins have also recovered on a sequential basis to nearly 16%. RK Baheti, the CFO at Alembic Pharma, joins us now with a quick call there. Mr. Baheti, good morning. Although your margins have recovered sequentially, they are nowhere close to the 27-30% that you used to see, pre-pandemic. I mean, in Q2 of FY21, for example, you were sitting at 30% margins. Now, of course, we don't expect it to come back to that anytime soon, but can you give us at least guidance on what the next couple of quarters could look like? If there is further recovery, then what could it be?
Yeah, sure. Thank you, Sonia. First of all, thanks to CNBC for hosting us.
Sure.
Your observations are very right. The margins are under pressure, primarily because US generic business is under pressure. And that's not for us only. That's almost for the entire industry, except the companies which have some strong specialty products. The entire generic industry is suffering price erosion in US, largely because of oversupplies. So what we are attempting is to hold on to our market share, to realize as good a price as is possible, because we are never a volume changer. I mean, we have always kept profitability in mind. And Q2, of course, as we said in our investor call also, we had some couple of one-off opportunities that helped in improving margin. What is more satisfying to us from margin point of view is the domestic business is growing, and it's growing as per plans. So X of what we call COVID-related sales last year, we have grown a decent 11%. Specialty is growing faster than that. And we'll continue to outperform the market. I mean, we hope to continue to outperform the market in the domestic business. And that's a more stable business from margin perspective. Margins have also been under pressure because, we are writing off some of those older amortized cost of the company which we 100% acquired and merged with Alembic, which is Alior, which is a dermaceutical company. The business per se is good because we have already got some 20-odd approvals. A lot of them have been launched. But again, due to market pressure or pricing pressure, I think the margins are under pressure.
Mr. Baheti, good morning. So you briefly alluded to this one-time opportunity, right, which was there. And how much of the sales, US sales, were on account of that? And what will we see in Q3 on account of that?
Yeah, I mean, okay, we don't give product-wise details or breakup, but we have guided in the past, not guided, but we have generally indicated in the past that we'll be happy with about $45-50 million of revenue per quarter in US, for US only. And then, of course, Europe and Australia and other markets chip in. Like Sonia also observed, API business has done very well for us. Strong performance on back of very high growth numbers for last year also. So we are happy about the API business.
Mr. Baheti, good morning. The last time I think we were chatting, you were more like 50 to 55 million USD per quarter. Now you're talking about 45 to 50. Which way is it swinging?
So no, you are absolutely right, and most of it is to do with the price erosion. As I said, we have held on market share of most of our larger products. We have also introduced few more products, but price erosion is sort of negating all of our positive efforts.
Understand that, and you spoke about how the generics business has been under pressure for a while. On an average, you used to do at one point about 500-600 crores of average revenues from the US generics business. In this quarter, that has come down to about 360 crores. What do you think the run rate could be? I mean, are you looking at a recovery to 400 crores, 450, or will it continue to be, subdued at these levels?
So X of US, because US is a very difficult market to predict in terms of growth, because whatever volume growth we do or new products we introduce, a significant portion of the growth number is determined by the prices which we realize for existing portfolio. So X of that, I think the other rest of world generic business should see a growth of 10-12%. and API will continue to see a growth of at least 10%.
All right, Mr. Baheti, we'll leave it there, sir. Thank you very much, and hope the pricing pressures in the US abate. That's been the big worry for lots of